A real Wall Street love story on Live Nation. Analysts at Citi upgrading the stock to a buy, saying the company's risk-reward looks more reasonable after the recent Taylor Swift Ticketmaster fiasco. Citi did, however, cut its price target for the stock by 9% to $82. Analysts also laying out a 20% likelihood that Live Nation is forced to split into two firms. You've been in this for a long time, Karen, so what do you think?
Yes. So there's two things going on. There's the Taylor debacle, right, which we all know, 3.5 billion orders. Things didn't work out well. But Ticketmaster was pilloried for sure. However, this was extraordinary demand. And Ticketmaster was not the only one who sold tickets for this. Was not the only ticket supplier.
Oh.
Others did as well. You haven't heard one thing about them. They had problems just as bad, if not worse. But Ticketmaster is, the 900, 800-pound gorilla. This is, a little bit of a black eye, but it's kind of over right now. There were too many ticket demands for Taylor. But the more important thing is the DOJ issue, right? For a long time, people have been, since actually the merger in 2010 or 12, people have been upset about them owning tickets and venues and having too much power. I think if this guy does think 20% likelihood that deal is undone, then I think it's kind of you can't own it. I think the chance of that is lower than 20%. But so I'm still long. It is not cheap by any stretch. They are in an extraordinary position. I do think that post-pandemic, things really came back hard, but I think they'll continue to grow.
Yeah. Guy?
Yeah, I mean, to Karen's point, trades probably 55 times next year's numbers. Maybe you have 30% EPS growth, which is good, but it's still an expensive stock. And what I find really interesting is the broad range of price targets in the analyst community. It goes from 70 on the low end to 140 on the high end. I think the average price target is 106. I think you probably, with the DOJ stuff, maybe having to go in front of all those things might have marked a short-term bottom. So if you're looking for a trading stock, you might have it. But I think it's hard to make an investment thesis in this environment, given the valuation and given some of the hurdles they face.
It's a pretty courageous call on the part of Citi when there's so much uncertainty ahead. And there are, to be sure, congressional hearings on the whole matter because all these congresspeople are outraged that their constituents couldn't buy Taylor Swift tickets, Jeff Mills. What do you think of this call?
Yeah, so I agree with Guy in the sense that I think you can play it for a trade here. It's something like 30% below the 200-day. It's right at that $70 level, which has been long-term support. So I think you can play it for a trade up to at least 80 in the near term. And I actually like it longer term. I like the business there. But my issue over the next 12 months is that this is a cyclical stock. I really feel like there are no two ways about it. And you can't really draw a straight line between the 2022 business fundamentals and what we're likely to see in 2023 and 2024. You can chart this stock's relative performance versus manufacturing PMI, and those things move in lockstep. So it wouldn't surprise me if this was an underperformer in 2023.